tech lovers. I'm Andrea, and this is Venture Talk by Techcelerator. This show aims to provide you with strong insights on building a startup, lesson learned, success drivers, and of course, tips and tricks for you to achieve your goals. Today, we have the pleasure to have a sneak peek into the investment strategy of one of the most remarkable VCs in Europe, Earlybird, with Dan Lupu partnered there. Dan, thanks a lot for taking the time to have this conversation.
Thank you for inviting me.
Earlybird, the digital list fund with the growth fund with some of the most notable beats we've seen. And we read so much news about this fund, and yet when it comes to the number of deals per year, you are constantly cautious. What's different about your investment strategy?
So first of all, we are not a growth fund. We are an early stage fund that invests in Eastern Europe. We are now investing out of our second fund for the region, 200 million euros. And we target companies that are in their early stages of growth and development. And at the same time, we are cautious in building our portfolio because we see a lot of opportunities. And one of the things that comes as a recurring theme in our region is the lack of capital for follow-on investments. This means that we are impacted in terms of the size of the portfolio we are able to build because we keep a lot of money reserves for follow-on investments. Otherwise, we fear that good companies would end up in a situation where they cannot raise additional capital because the locally available capital is limited, and capital from more developed markets is quite fleeting. So today it can be available, tomorrow it might not be.
Mm-hmm. That's right. But even so, I remember that a while back, people were saying that your acceptance numbers are comparable to Harvard. How much truth is into this? Yeah, that was a rumor in the market.
Really? Okay, I'm not part of that that rumor. I haven't. It's the first time I heard about it. It might be true. Most probably we see somewhere in the region of 500 to 1,000 opportunities a year, and we invest over a 5-year period. And in the first fund we had 15 companies in our portfolio. In the second, most probably we'll go a bit up, maybe 16, 18 companies in the portfolio. So that would be, let's say, 2,000 to 3,000 companies out of that we see, out of which we invest in maybe 20. But I think that's less about how many companies we invest in, because that's more or less a given. But it says more about the growing opportunity, with much more companies being formed these days than 10 years ago.
Mm-hmm. Yeah, that's right. And because you are seeing so many good opportunities in the market, what should be the secret ingredient for a startup in order to grab your attention?
I don't think there's any secret ingredient, and I don't think we have a special formula that is very significantly different from most good investors. We are looking for large opportunities, large markets with good teams that are trying to address a hard technology problem. That's basically the playbook of every investor in the VC space.
Mm-hmm. And do you have any sector that you like in particular, you personally?
I can tell you what I not that I don't like, what I don't feel comfortable with, which is consumer related businesses. I tend to be more comfortable about B2B software and deep tech. But as a fund, we invested in a very broad universe of companies, from consumer companies and marketplaces to deep tech, B2B software, obviously, and hardware as well. We tend to be very flexible in the type of opportunities that we get warm up to, but this comes because the markets are not deep enough. It also, when I say that the markets are not deep enough, when we started investing in the first fund, there was no discussion of RPA, so we did not target RPA or automation in general as a theme for the fund, but it just happened that we made a couple of good investments in the space. The same thing, we did not really target investing in hardware, but a good opportunity arose with Photoneo in Slovakia, and we spent the time to understand it, and now we are very happy to have made the investment. It also, I think that the broad universe of the companies we invested in also reflects the size and the diversity in our team. We have people that are more comfortable around the consumer businesses, and they are leading the investment. So it's not, we don't have to, it doesn't have to be me that makes the investment. We always put our best foot forward.
And because you have mentioned about your first fund, how things have evolved over the time and the way of you are doing business?
I'd say that there's more companies that are being formed, so the universe of potential investees is increasing significantly. This is driven by the fact that local early stage funds are more prevalent in the market these days. Now we have a couple in Romania. When we started, there were only 2 in Bulgaria. Obviously, Poland was quite developed and continues to be so. But now we see in most of the countries in the region, there are locally funded funds that are doing a good job of creating the opportunity for teams to start companies. So this changed. I think also what changed is the profile of the region. I think based on investments that became high profile, more good investors from outside the region are willing to invest and consider investments in the region. So this is also something that has a significant impact, also because it drives more competition. What I think didn't change is also the relative lack of institutional capital in the region. We still think that we are orders of magnitude below where availability of capital should be. And this has important implications both for us and our portfolio companies.
And do you think that this thing will change over the years?
I hope so, but this is a structural problem. I don't see it changing. I don't see it changing over the last 10 years.
Okay, that's interesting. Going a little bit back to the startups, I think that as an investor, you've often been put in the position to choose between 2 good companies, maybe with similar growth and similar product market fit. How do you make a choice then?
I'm not sure we have to make a choice. Most probably we'll do both investments if they are good investments.
Okay, that's good to know for the startups.
No, I mean, I just made 3 investments in a short period of time after a long period in which I didn't make any new investment. So it all depends on our perception of how well the company fits with our investment strategy and investment objectives.
Okay, you are quite a team, but in the same time you have an impressive portfolio. How do you manage the relationship with the startups, and how close is the relationship between Earlybird and the companies that you have?
It's as close as the companies want it to be. What we can offer is availability, so we are always available, meaning that I pick up the phone at midnight if need be. It's not the case, but it happened. And we try to use both our knowledge and personal networks as well as what we learned from our portfolio companies to help address issues that are popping up and are normal to be popping up with all the companies that we invest in. We also try to be helpful in creating consortiums of investors that are providing follow-on funding. We bring in people from the very early stages in order to make sure that there are more people around the table, both in terms of experience and capital availability.
Okay.
But we are not operators, so
yeah.
we would not drive change in the company, or we would not take start managing the company. We are always investors, and we recognize the important contribution and the importance of the executives in the company to the development.
And talking about change, but in another perspective, seems that some of the big bets from your portfolio are ones from the companies that are reinventing the traditional sectors. Even so, you've kept you away from trends like blockchain, NFTs, and crypto. How come?
I mean, most of the technology companies these days are reinventing existing sectors. I mean, technology is pervasive now, and everybody understands how important technology is and how it can reshape sectors. I personally am not, I'm not interested, and I don't see the value in blockchain and crypto. I might not be smart enough for that, but as I tend to focus on things that I don't understand, that I understand, and this is something that I don't understand. I don't have a framework for understanding what's the value of Bitcoin, for example, and this is something that prevents me from ever considering an investment. I understand the technology. Many times I see it pushed forward in pitches. Very seldom did I see it resist the question about why it's not being done with the database. So I mean, I understand the political attractiveness of the decentralization of idea and the lack of central control. But on a practical basis, I don't understand.
Okay. How is the new young generation of entrepreneurs different from the more experienced professionals? How is the game changing?
I think first of all, there are both positives and negatives. We see more non-technical people wanting to start companies in the technology sector. So there's just the sheer number of companies that are being created is changing. We see teams that are much more comfortable getting into the funding bandwagon. At the same time, I think there's also a bit of
I think that I lost you for a second. Okay, I can hear you now. That's okay.
Okay. Where did you hear? Where did you lose me?
Actually, at the beginning of the answer. So it would be great if you can say it again.
Okay, so we see more non-technical people starting companies in the technology space, which is okay because this expands the universe of opportunities. At the same time, we see people getting more comfortable with getting into the fundraising bandwagon and looking to fundraise in order to start a company. This is both positive and negative. It's negative in the sense that many people think of funding rather than thinking of building a company. But the reality that you need capital in order to drive velocity, it's something that becomes more more acceptable to more people, and I think that's a positive. You don't see what used to be companies that are spending 2-3 years developing a product that nobody knows about, and then they face the market and the landscape is completely changed.
Yeah, that's right. They're moving a bit faster.
Yeah, exactly.
What is one industry that can give the world the next 5 unicorns in a short span of time? And in an industry that is growing a lot.
I have no idea.
Okay, but do you have any advice for the founders that are trying to raise a new investment round now?
I think they should be realistic about the size of the opportunity, and they should understand whether they need to raise funds from VCs, which are pushing for growth, or they would be better served if they build a company. It can be a lifestyle business, nothing wrong about it, and they can have as much impact and they can have as good of an outcome without getting into this carousel of funding rounds and growth at all costs.
And I have a last question for you. Where do you think that the SEE ecosystem of startups and investors will be in 3 years from now?
Which ecosystem? Sorry,
SEE.
SEE. Well, I mean, the things are moving quite quickly. I'm looking forward to the day we will be having a locally focused growth fund, for example, because that's very important in order to keep the companies here developing and providing funding for their development. Otherwise, many companies would fail to realize their full opportunity.
Then thanks a lot.
But otherwise, I'm quite optimistic about the size of the opportunity in terms of number of companies that are being developed, the creativity around the type of companies that are being developed, and the energy of the entrepreneurs in the region.
These are some great news to hear. Dan, thanks a lot for this insightful conversation. It was a real pleasure to talk to you. And for those listening to us, don't forget to give us a like and subscribe to our YouTube channel.
Thank you, Andrea.